day, ladies and gentlemen. It's Eric Coffin. I'm here locked down, self-lockdown, sitting in my dining room in Vancouver. I'm speaking to a longtime friend and a legend of the business, John Robbins, who's also locked down, in his case, in a cabin in the interior of BC. I'm pretty sure most of you know John, at least by reputation. He's head of the Discovery Group, but he was intimately involved with founding and running 2 or 3 recent highly successful deals that ended in lucrative takeovers. And he's currently working on several companies that are part of the Discovery Group. I wanted to check in with John because the companies in the group are sort of wide variety of areas and locales that they're working in, but also a wide variety of sort of level of advancement. I mean, you've got everything from early stage to companies on the cusp of production. And I was just curious about how's the Discovery Group holding up, and are you guys able to deal with this situation with the everybody working from home and sort of being isolated? Is things still sort of moving forward in the group, John?
Well, first of all, it's a pleasure to talk to you today, Eric. Yeah, I would say our Discovery Group of companies have adapted fairly quickly. A lot of our people work quite a bit from home as it is because of our situation with remote camps and whatnot. We're kind of used to working sort of online, as it were. So obviously, it's had an impact on our group. That said, I would say we haven't really lost a lot of ground here. In the case of Great Bear, we continue to drill. We've got 3 drills turning in Red Lake right now.
Right.
Companies like Bluestone, as we advance Cerro Blanco towards production. A lot of our work right now is desktop engineering work. That really hasn't been impacted at all.
Right.
We're obviously mindful of our people and the frontline people that are on the ground. So we're taking, all the proper precautions to protect people. But I would say, for the most part, all of the companies are, kind of carrying on. An awful lot of the work that we do is desktop related, compilation of data, reviewing new projects, looking at various, in some cases, M&A opportunities. So a lot of that can carry on without too much distraction. And in some ways, elements of our business are more productive. I'm stuck here in a cabin in the Chilcotin, and I would say because I've got some pretty good satellite connections here, I'm arguably as productive here as I was in Vancouver.
Yeah, I mean, I'm used to working out of a home office or going to meetings. I mean, obviously we're not doing the downtown meetings right now, but it's not that hard to just do a lot of this stuff over the phone. It's good to hear that everybody's okay and that things are moving forward. I wanted to get your perspective too. I mean, you and I have been through a few bear markets in our time. Have you got any general observations that you want to make, or whatever comfort you want to give people? I mean, we've seen ugly markets before, both of us. Have you got any sort of words of wisdom in terms of getting through a market like this and dealing with it as an investor, say?
Well, a bit, I guess. I will say what we're going through right now is rather unprecedented. We've gone through, as you say, several market crashes and corrections over the years. For me, starting in 1987.
Yeah.
This has got some different implications, which I think we, as an investor, one can take advantage of. We're seeing a progressive shutdown of projects, both exploration and production. That's going to cause some serious squeezes on the metal front, particularly. I think it'll have a very positive impact on gold.
Right.
I remember in 1987, I was just starting out in geology, and I was working on a project up in the Golden Triangle, and we were driving an exploration drift in towards a vein, and it was Friday, I think October 16th, when we intersected the vein. we thought we were going to be fabulously rich. And on Monday, we experienced one of the biggest market crashes ever.
Right.
And much like today, everybody thought the sky is falling. It's the end of the world. It's going to be tragic. In 2 years, the market had made up all of its losses. So I think the worst thing people can do is panic and sell their positions right now.
Right.
What I've always done, and it's worked for me, is I've taken times like this as an opportunity to reassess my portfolio, rebalance. Good example was I sold one of my holdings was a company that had a reasonably good dividend yield, but it was in the building supply space. Well, I don't think there's going to be a whole lot of building supplies sold in the short term.
Right.
But so I think it's a good time to rebalance equity portfolios. And if you do it smartly, often you come out ahead at the end of the day. This may take longer to sort itself out than some of the other crashes that we've been through. But I think if you position yourself in the right commodity, I think you're going to come out of this well. It just depends on the companies you select, really.
Yeah, I mean, my feelings are much the same. I mean, I thought long and hard about it because I know a lot of my friends in the business, if you will. There were varying reactions. I know a few people who basically just told people to sell everything. I don't see the logic of that. I mean, I know my own experience was I've had a couple of crashes where I basically blew everything out on the way back. And my experience is when you do that, the theory is that if you do that and you buy at the bottom, that you're going to come out of it a lot better. The only problem with that theory is one, you have to know it's the bottom, which is not always easy. And two, having sold, you've got to kind of talk yourself into buying, which is I find for most people it's hard to do when they've sold out. Pulling the trigger again is difficult. So yeah, I mean, I've suggested to subscribers, like, if there's something that's a real dog, you might as well just get rid of it. You might as well try to give yourself a bit of a cash buffer. But that said, I found the last, 2007, 2008, 2009. I mean, I sold a few things going into that, not that much. I probably came out of that one better because I didn't blow everything out. The one before that, I freaked out and blew everything out. And, it was too long before I got back into the market. I missed a lot of the easy gains that I would have had just doing nothing, essentially. So that I'm largely doing nothing and looking for opportunities. One company that comes to mind, I mean, one of the big successes that you're known for, that you're involved with. I'm curious if there's any lessons in that one because it happened to span, a crash essentially, and that's Kamenak.
Yeah.
I'm thinking back to 2008, 2009. Kamenak was already sort of making headway when things kind of got really sketchy there. How did you guys deal with that? I mean, were there any lessons for the group from the way that Kamenak came through a really difficult market?
Yeah, absolutely. We made a very significant discovery, as you're aware, in the Yukon, and we made that discovery before the financial crisis in 2008.
Mm-hmm.
Nevertheless, our stock still took a big dive. During that time period, like a lot of companies did, basically went no bid for a while. A couple of lessons that I learned there, I mean, obviously, Kamenak recovered fairly well, certainly on a market cap basis. It recovered, and we kept working when a lot of companies stopped working. I remember running into an analyst at the BMO conference, and he berated Ira and myself for carrying on. And he said, basically, you're fools for carrying on. You should just down tools. And we didn't do that.
Mm-hmm.
And as a result, we were able to keep the momentum going and ended up selling the company for a little over 500 million. And of course, that's the good side. The other side was that we were a little cocky as well when we made the discovery, and we didn't take as much money off the table as we should have. Right. We were offered money and we didn't take it all. And, when we went into the financial crisis, we came out the other side reasonably okay, but we ended up, we were trading $4.50 before the market crash.
Yeah.
and we ended up doing a series of financing sub $1 because we didn't have the strong balance sheet. That's you've got a big discovery. It's really important to maintain a strong balance sheet, and I've really strived to do that, across the board in the group. For the most part, we've got strong balance sheets, or we have, good access to capital. We've been able to keep our share count down, so we've got good, strong companies. But yeah, Kaminak taught me some lessons, some good, some painful ones. But I think that's the story in our business, is that you're always learning.
Yeah, because I know you that I knew for a fact, obviously, that you were in the take the money camp, and I was pretty sure Kaminak was the reason for that. And I think it's probably serving you well now, because most of the group companies are pretty well financed. Have you got any thoughts on, there's long term and there's short term, and for now we're just sort of dealing with the short term, but I think it's important not to forget longer term potential, both of projects and of metals. I mean, have you got any sense about, what are your thoughts in terms of, say, precious metals versus base metals, that sort of thing? I mean, obviously, they're quite different things in terms of how they react to this kind of situation.
Yeah, for sure. We spoke the other day about whether either one of us were really gold bugs at heart. And, I have to say that I've never been one of these diehard gold bugs.
Yeah.
But right now I see the fundamentals set, the stage is set for, I think, a tremendous run on precious metals, particularly gold. I mean, you're seeing day after day, the list keeps growing of major producers that are ceasing or suspending operations because of the COVID crisis. That's going to create a very big supply deficit. At the same time, you've got a demand. You hear stories that people are trying to buy physical bullion in some of the exchange stores downtown. They're physically unable to buy the metal. Yeah. I think that's just going to get exacerbated with the U.S., basically taking on trillions of dollars of new debt. Canada, the same, right across the entire planet. They're printing money at levels that we've never seen in history. That has to be good for the price of gold. You combine that with what's going to be a shortfall in production. I think gold is absolutely the place to be for the foreseeable future. That said, you look at base metals in the short term, probably not a great place to be in the short term. That said, these same supply issues are happening right across the globe with base metal producers. Now, that'll be offset, of course, with weakened demand because of the slowdown in the economy. Yeah. But I think what you're seeing is the spring is getting wound tighter and tighter on the base metal play. I've always been a big believer in base metals. I love copper. I love zinc. I think we're going to have to wait a little longer, but when that rebound happens, I think it's going to be ferocious. So I'm a big believer longer term in those.
Well, and I guess on that side too, on the base metal side, you're probably likely to see more. You are going to see more capital constraints. So, I mean, I think we have to wait and see how big the demand shock ultimately is. But there's definitely more of a supply issue than maybe there might have been 6 months ago or 9 months ago, because I think a lot of the models that you've got that show forward production levels for, say, copper and zinc, you can probably throw those out the window, because I think a lot of those production increases aren't coming now. They aren't going to happen. There's going to have to be some balance. I would agree with you on gold, by the way. Neither of us are really gold bugs, quote unquote, but I actually tried to pick up a bit more physical, both gold and silver in the last week, and there's nothing that I could find. I mean, I checked all of the major online sites that generally have tons of inventory, and nobody's got anything. There's nothing out there. I mean, I'm not counseling people. I'm not saying go on eBay and pay $2,500 for some guy selling Maple Leafs today. This is a flow issue, not a stock issue. There is gold around. It's just not in places that you can buy it from. But the
Yeah.
overwhelming sort of demand increase, I don't think that's going to change. I mean, I've had guys I know in the business who have nothing to do with the mining sector, guys from the hedge fund community, fund managers, guys that really have no interest in gold mining whatsoever, um, texting me and calling me and saying, if you had to buy 5 gold stocks today, what would it be? These are guys that have never been anywhere near this stuff. So I think there's a lot. I think there's a lot of money coming to the gold side of the sector, like quite a lot actually.
Yeah, and that's the same intel I'm getting. The generalists are starting to make calls to the bankers and looking at what's out there. Yeah, I think that the gold space in the foreseeable future, both physical and with the proper exploration, development, and producers, is going to be the place to be in the short term.
Is there anything else you want to pass on, just in terms of general comments going forward to everybody in the audience here?
Well, I guess the thing, as much as possible, we have to stay calm and be rational. As I said before, I think the worst thing people can do is panic and get out of their positions. It's one thing to reallocate your capital around within your portfolio, but to sell and go to cash, you'll get trapped in the situation where psychologically the market does start turning around, and then you start feeling like you've missed it. And every day the market goes up, and every day you're more paralyzed, and you end up missing the boat. I did an analysis post the 2008 crash, just on my own portfolio. Obviously, going back to the very beginning when I first started investing in 1987, my portfolio, of course, wasn't worth a whole lot back then. But it was interesting when I looked at it. I emerged in a better position after these crashes than when I went in. And I attribute that to reallocating, looking at we all collect stocks that we don't, after a few years, we don't even know why we own some of them.
Yeah.
And if you do the simple analysis, is there good people? Do they have a track record of success? Are the projects good? If they're really grassroots and you have people that are inexperienced, well, those are going to be tough. But if you've got good projects, good people, and groups that have access to capital, those stocks are going to do just fine. And of course, you want to be in the right commodities too.
Yeah.
Even in the oil and gas space, there's opportunities right now, which really seems contrarian, but there's going to be great opportunities in that area as well too. You just have to do your homework, try and get as much of a consensus by talking to analysts, people that you've seen have done well over their careers, and get their thoughts, and then form your own opinions. But the worst thing you can do is panic, I think.
Yeah, I would agree with that. I mean, I think it hasn't served me well in the past to freak out, and I'm not planning to this time. I mean, yeah, would I be happier if my brokerage account balances looked like they did 2 months ago? Like, yeah, but I've been through a couple of these before, and my holdings tend to lean fairly heavily towards gold companies anyway, so I'm not that concerned about it. I mean, a lot of people have brought up the closures, which you mentioned, and yeah, I mean, that's an issue for miners, but ultimately they're going to get valued on reserves in the ground and continuing operations. The fact that 1 or 2 of their operations are shut for a month or 2 months, I frankly don't think that's going to have a huge impact on the valuation. As long as people see those as temporary shutdowns, I think whatever the impact of those shutdowns is, it's going to be overwhelmed by the movement in the underlying commodity anyway. So it's not something I'm going to lose a lot of sleep over. I think all of those companies are going to be valued a lot higher. Plus, they're simply going to put up way, way better numbers. I mean, gold companies are going to make a lot of money this year. And the list of industries that you can say that about looks pretty short right now. Gold mining is about it, really. I can't think of anything else that I think is going to do well out of this. I mean, obviously somebody finds a cure for this, that drug maker is going to go to the moon. But aside from that, I don't see many industries actually coming out of this for this being a positive event. I think the important thing for all of us is just to try to get through this. It's going to be, we don't know what the schedule is here. All we can do is try to follow the best advice out there. And one thing I want to remind people, this is something that went out in one of the alerts I sent last week. I mentioned some of the things that I'm doing, like anybody that helps me out, like at a business level or at a personal level, like the lady that comes in to clean the place, and the guys that do the yard, all that kind of stuff. I've paid all those people a month ahead, and I'll do it again if this thing is still shut down. I think, aside from anything else, what has to come out of this, given what we're all dealing with, is, for lack of a better phrase, a bull market and kindness. I think we all just got to try to take care of each other.
Yeah, and I have to say, at least the way it's played out in Canada so far, I think we're seeing that. It's not far, I think, in a lot of societies to slip into chaos, and I think Canadians have really pulled together. I think it's reflected even in how the COVID is being handled in Canada. I think it's bringing out the best in people so far.
Yeah, agreed. Okay, I just want to thank you for meeting up with me today virtually, John. I mean, I know you've got. If you're wondering why John's head's smaller, that's not my ego. It's because his bandwidth is a little bit light, so the program is automatically trying to adjust for that, because he's out there in the Chilcotin, beautiful cabin, by the way. I'm hoping to actually see you in person sooner rather than later. Everybody else too, but for the time being, I guess we'll just stick with this virtual stuff. Thanks for joining me today, John. I'll check in with you again soon.
Thanks a lot, Eric. It was a pleasure. Cheers.
See you later, ladies and gents.